What up, what up? It's Try's World. Welcome to Try's World. Monday, March 16th, 2026. Today, Mondays are busy days for me. Weekend was busy. You know, there's some compliance stuff around this time. Not heavy because of the way I'm set up, but some compliance stuff that I had to catch up on. Receipts, personal stuff, personal receipts, things of that nature. My shorts views are back, apparently, and seems like I was doing too many uploads, and so it kind of overwhelmed the system. That's what it seemed like. So lesson learned, gotta kind of chill with the posts, which brings me back to, you know, it may be better for me to record every other day, once a week, whatever it is. So you may see the cadence change, just FYI, but I still think there's some things to talk about news-wise, newsworthy-wise, markets-wise, things of that nature. It seems like the president is ordering or asking the world to help defend or clear the Strait of Hormuz. So that was the big news for the day, the big headline news. It's not anything groundbreaking or anything like that, but that's what happened today. Markets, you know, they go up and down. They were up today. Could have been because of that, because it just sold off. It could have been just because it's sold off in the past few days. So who knows? That's what the market does. But again, I'll go back to this. And this was happening since last year. What's been going on underneath has been very, very volatile. And so you're seeing pockets that are experiencing correction territory, very much so, and could, I'm not saying is, present an opportunity for those who are patient. And so I got that down as a note today in terms of patience. And I just, so important, I exercise that so often in what I'm doing. And I'm more patient when I buy stocks. It doesn't matter if you're indexing or you're buying stocks. My recommendation is do not use margin. Do not use margin loans, meaning borrowing from your brokerage in order to invest in the stock market. And it's because stocks are volatile, and if you have borrowed money, there's a arithmetic way to. It's basically, if you leverage, your gains are amplified, or so are your losses. Your losses are very much amplified as well, and so you have to keep that in mind as you're investing. Well, most people may not keep it in mind, but the point is, most people do. It's jarring to see your portfolio jumping, and so that plays tricks on your mind, and it may force you to sell early, or sell at the wrong time or buy at the wrong time, because that's what margin does. It's fun to see it when it goes up, of course, but then when it starts reversing, that's when it starts playing tricks in your mind. And so I highly recommend against using margin. And this goes back to the debt discussion and not staying away from credit card debt. Margin loans are in many ways just as bad. If you don't see an end result or an end goal, and you're just borrowing on margin for long periods of time, then guess what? You're borrowing on a variable rate of interest. And if you've bought the wrong stock, it could very much, again, play tricks in your mind in terms of when it turns the wrong way. But it also, if you bought the wrong stock, it'll magnify your losses. So just keep that in mind when you're buying stocks on margin. Those are things I would keep in mind. But yeah, the main thing is, and it depends on who you talk to. The problem with margin loans is they're also variable rate interest, meaning if interest rates go up for whatever reason, or it could go down in your favor, but the point is, if it goes up for whatever reason, you're going to be stuck paying more and more in order to justify that margin loan. So keep that in mind as you're investing, and you don't want to be too confident. When investing. And borrowing on margin can be really right or really wrong. And so, yeah, I'd just be careful of that. Thanks for the views. I did mention the other day my videos aren't, like my long form pods aren't getting views, but that's not true. I post the whole thing to Facebook, wherever the platform is. I don't care. If it can handle it, I'll post it there. And I do get a lot of views. You can see the views on Facebook and all that, so can't complain. I could route y'all, I guess, all to YouTube, but that's not really important to me. What's important is that I am getting the information out. People are able to access it easily. So you'll see me sometimes post the link. Or actually, I'd just rather post the video, but LinkedIn doesn't allow me to post the whole video, because usually it's longer than what LinkedIn only allows 10 minutes or less. So I think it's maybe 15 minutes or less, which if it was that, I'd post the but I think it's 10 minutes or less. So I tend to post the whole link. I post it to Spotify. I'm getting, depends on your platform. Like YouTube, once you close it out, you can't listen to it. Versus Spotify, you can close it out and continue to listen to the podcast. Maybe without video, but you can at least hear the audio. Like let's say you're going to the gym, you can listen to Tri's World on Spotify. So just keep that in mind. That's why I post so many different forms. Not everybody's sitting there on their computer, like with YouTube open. I know I rarely do that, so I can understand if others don't. Yeah, I'm getting a lot of comments on my sports posts, mainly in TikTok, about Bam's 83 and how he went about getting his 83 and things of that nature. I'm not really done talking about markets just yet, but that's something I wanted to talk about, some sports stuff, probably towards the end. But I did want to go back to markets, stocks, investing, whatever news. And again, these principles I've learned that can be applied to your everyday investing, whether it's passive or active, and that is patience. I don't know. And why I mention this is because patience can be practiced. Not everybody has a natural ability to be patient, but I believe that it could be worked on. I believe everything can be worked on. That's just what I believe. One of my heroes in investing, Warren Buffett, he likes to say, you either understand that you could buy $1 for 50 cents, potentially, basically buy things undervalued, or not. And that might have been C. Webb, by the way, trying to make $1 out of 15 cents. That was C. Webb. I say 50 cents because Warren likes to invest with what folks call a margin of safety, meaning however right you think you are. And that's again, goes back to margin. Margin doesn't, if you think you're getting an incredible deal and you just know it, maybe for your personal portfolio or something, I guess I can see why you'd want to take advantage of that opportunity. Charlie Munger is a big fan of borrowing money, but in my experience, it's just not it's not a great way to invest. Mainly because of the psychological games it's playing on you. No matter how right you may be, watching your investment drop by 10%, now it's magnified to 20, 30, 40% because of margin. Only so many people can handle that without freaking out. And I don't think even professional investors can barely handle that. So that's why I recommend against it in my experience. It's just very jarring. And markets do this all the time. That's what markets do. That is Mr. Market. He's a crazy guy, and he's going to make you feel crazier with margin. So just be careful when investing. And patience, again, I'm going to go back to patience, and it's just I don't know how to practice this necessarily, except this goes back to, like, you can actually practice breathing exercises. I think you can even go like practice meditation or some Zen type stuff. I don't know. That might help you. But if you're a theoretical thinker, just understand that stocks are a weighing machine in the long run, and they're a voting machine in the short run. So whatever's popular at the moment, whatever you're hearing, whatever's scary, whatever's not scary, you're going to see it all in the short run. And don't chase after that. Those are fads. And the only enduring thing when investing is long-term value. And so, but the problem is you don't always realize that value unless you give it time. And without time, you'll never see your work. You may never see your work blossom. It may never come to fruition if you aren't patient. And so I practice that with everything. I have to remind myself that you got to be patient. You got to be patient. Whether it's and it applies to so many things in life. I would say I've learned it, and I can't continue to practice it as often as I can, as diligently as I can. But it takes self-reflection too to be able to say, hey, look, I'm rushing something that probably shouldn't be rushed. And take a deep breath. What I sometimes do is reread Intelligent Investor. Sometimes I'll look at some videos on my favorite investors. Sometimes I'll just take a walk. I'd rather go and watch a bunch of Netflix than sit there and trade in and out of ideas all day. You really shouldn't be doing that. So really, there's a bunch of things to do. You could be looking for your next, better idea. If you find a better idea, I get it. But don't just use that as an excuse to like buy and sell all the time. But yeah, of course, if you find a better idea, go for it. So you can keep researching stuff, you can keep learning. So there's plenty of other things you can do to make sure that you're not buying or selling prematurely or too late or something like that. It's just inaction is one of the most profitable actions if you're in the right stuff long term. And if you find yourself just jumping at every small thing, probably not a long-term strategy. But yeah, I mean, going back, I'm getting a lot of views on my Shohei contract comments, sports comments. Bam's 83. Folks are saying he took too many free throws. He kind of cheated. They felt like to surpass Kobe by 2 points, and it wasn't legit with the 40 free throws and getting fouled and trying to get extra possessions at the end of the game. And my whole thing is, I watched a thing on Dwayne Wade, and he's like, I don't care what anybody says. Essentially, he could put in on his best shoes, and at Anytime Fitness, he couldn't get 83 right now. Just going to the gym and playing pickup basketball. That's how hard it is, let alone an NBA game. I don't care if it's a scrub NBA game, like scrub NBA people. It's still really, really difficult. And he had 70 with 9 minutes left. He said this too. So what's he supposed to do? Just sit out, But if you look up some Michael Beasley videos on what he thinks about Bam. He likes to say your favorite ballers, your favorite hero's hero is Michael Beasley. He's the underground sort of baller who plays, I think, in Two Shorts League, 3-on-3 or whatever that league is, the Big Three. And he does really well. He's known to be a basketball head and really put in the time and has the patience and to work on his skill set. And he says he's beat a whole bunch of people, including like Braun and some other people. But he says the one person who's beat him, and I think maybe even the only one, is Bam. And he's like, yeah, like for his size, he's a point guard in that body, but he's always played with some pretty alpha personalities like Jimmy Butler and all that. So those are my thoughts on Bam. There's still some people who are like, he shouldn't have did it. He should have did it right. It's just, the point is, I don't know. There is no, I don't know what the right way to get 83 is. That is tough. If they had to foul him 40 times, or put him to the free throw line 20 times, or he still has to hit his free throws, by the way. And for them so they were trying to slow him down. Why would they try to help him? I don't think they were trying to help him. So, and then finally, I did say at some point in my videos that in terms of probabilities and things of that nature, and trying things when you're young, like starting businesses and that type of thing. But, right, and it may not be for everyone. That isn't the end goal for everybody. Some people are happy and they very well should be happy in having a great and secure job. And I know plenty of people who have done extremely well working consistently and things of that nature. Getting a pension and things of that nature. So I have nothing against it. I'm not saying, the whole reason why I brought up the probability thing was not to say, hey, go out and start a business. And look, what I mean by that is, it applies because you just never know. It applies to open systems, open scenarios. I don't care if you're buying a home. I don't care if you're negotiating your first employment contract. It's all the same thing, but I apply it back to probabilities. If the net benefit is positive and you can do it over a long period of time without obviously getting taken out, you should do that. You should take that action if you see yourself in the same and similar situations every time. And why I say that is, the safest thing people thought they could do in 2022 was to invest in bonds. And I brought this up before. By the way you can track bond values is you could just look up the aggregate bond index and you can see what values they were at and where they are now, and they still have not recovered from 2022. My point is, people viewed bonds at that point as it was paying very little, maybe less than inflation probably. The risk-free rate was like 2%, something ridiculous. I think the 10-year yield was like 2 to 3%. And it's still just 5%, which are around there, which isn't that crazy high, but it's been going up ever since 2022, to the chagrin of the president. Because what president doesn't want low interest rates and easy money and a booming stock market and a booming everything when money's easy. The problem is it causes inflation, it's bad for the dollar, and it's bad for us long run. Everyone thought bonds were safe, and they were paying practically nothing. They were they were probably one of the more dangerous investments, but people kept piling in. Should people have bonds as a diversifier? Sure. I mean, that's what is typical. I mean, I say that because even in the intelligent investor, I mean, there's a recommendation of a small allocation to bonds. So I don't blame people for going into bonds. It's just, I think people over allocated to bonds because they felt like it was safe, even though it was paying 2%. But to them, it was a guaranteed 2%, or so they thought. They thought it was guaranteed 100%. Or even let's just say during COVID, when the market dropped and quickly recovered, people who were sitting in cash at that time, very noteworthy investors who did that, felt 100% safe in cash because it can't go down. The problem is now they lost out on that rebound coming out of 2020, and they missed out on a once-in-a-lifetime buying opportunity. See, these don't happen often, and you got to be ready. And people instead sat in their hands because it was safe. It was 100% guaranteed they weren't going to lose money. But guess what? When valuations go down, there's a much higher chance of you making money than losing money, and people should have took that bet. Okay, so that's the best way I can say it, is it applies to so many areas in life. It doesn't mean you have to go out and start a business, but whether you just never know though when you're in a situation where you're negotiating something in an open system, whether it's your employment contract, whether it's a home, and you never know. You might be in business and you didn't even realize you wanted to be in a business. You just have this entrepreneurial bug. I don't know, so to those out there who, like accountants, for example, can start their own business. You just never know. So obviously I'm a fan of it, but if you do it the right way, probabilities don't matter if you multiply whatever the negative result is by 0. So for example, it may be a tiny small chance you can just go bust. Teeny tiny chance. If it happens, everything blows up. Should you take it? I mean, that's when you have to do the math. But I mean, part of doing this and part of money management is you shouldn't take that risk, even if it's very, 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 very small, especially when managing money for others. So, and that applies to, again, other areas of life as well. I mean, Charlie Munger likes to say, I just want to know where I'll die so I don't ever go there. Yeah. So, meaning, if it looks remotely suspicious, he doesn't want to go there. And he didn't even want to take the chance. And so if you're in a scenario where you're putting your life on the line and there's this really small chance that you could lose your life, should you take it? And I saw this little meme. I saw one of my friends reposted it. Would you take 10 million right now? The guy goes, yes. Would you take 10 million if you didn't wake up tomorrow? That's the guarantee. Like you have basically the rest of this evening or whatever, the rest of this day, you can't wake up tomorrow. No. The guy answers no. So your life is worth, right, tens of millions of dollars by waking up and being able to breathe. That should be worth tens of millions of dollars, maybe even more. So, that's another way of looking at it, of taking gambles and taking bets and probabilities. There's a chance you can lose all your money. Don't take it. Margin is one of the worst things that you could do. Borrowing too much money. The wise investors, you know who I'm talking about. They call it the 3 L's. They don't say the third L anymore. But it's liquor and leverage. So, and that could be applied to many scenarios. But the point is, don't gamble. Don't gamble with your life. Don't gamble with your money. As in, I talk about probabilities assuming you can survive it. I've said that at the very initial kind of thing. But you've got to manage your risk so that if the odds are you can lose everything, don't take it. So that's what I'll say about probabilities and risk management and things of that nature. So with that said, while you're young, and I get the experience thing, it's just if you've got some years ahead of you, I mean, most people work till they're 60, 65, 70. If you still have time, you're going to have time to recover. I mean, at the end of the day, if you've made a mistake or whatever it is, a business mistake or whatever it is, as long as you have your health, your family, your well-being, everything there, that's the most important. That's the most important. Everything else I think may take time, but you'll recover. And so with that said, I mean, you got to look at your downside risks always, and if there's any chance that it can go to 0, don't take that chance. That's what I would say. And if you've taken the chance, if you've taken that probability and you're looking for that net payoff, and there's almost no chance you're going to lose everything, or basically zero chance. Hopefully, there's never a zero chance, right? But I mean, the point is you've minimized it to almost not going to happen. Then the result's going to take time. It's going to take time to come to fruition. And I encourage folks to exercise patience, breathe, do something else, pick up a hobby. That's why I picked up, DJing here and there and hanging out. You can have a very full life and do this and invest as well. But I think at the end of the day, you got to love what you do and be passionate about it, so on and so forth. But you could absolutely have a life outside of, and you probably should, sometimes, just so you can let ideas come to fruition. So, all right, y'all. Really appreciate it. I'm going to end it. Thanks. Take care.